All right. So I'm gonna start doing these recordings again. I'm not gonna start recording live again yet, but these last few weeks, months that I've been off, I do feel like I've progressed a lot emotionally, maturity wise. I'm not chasing trades as much. Still happens once in a while, but I'm doing my best to not. So anyway, let's see what we had today, right? It's 10:30 a.m. I'm pretty much done trading because you see this. I took a bunch of trades already, and it's just not looking so clean. But anyway, let's get into my first trade. So we were bullish this morning, London session. Let's see where this Asia session are. We took Asia highs. We were bullish. We had 8 London lows, Asia lows, all intact. Well, yeah. So what I was looking at was that we created this breaker. We had our high, low, higher high, and then what I saw is our negative standard deviation of 2 to 2.5 was right with this 5 minute, or it's a 15-minute BISI. So once we started pushing down, and we had these lows, we took out London lows, and we had SMT with ES and everything else here. This is ES, Dow, and this is dollar. So you see we had our lower low made, but here we didn't have lower low. So I kind of started anticipating a little bit of bullish action to more than likely take out London highs. But what I noticed has been happening a lot to me lately is that I put my TP too high. And whenever I put my TP too high, it doesn't reach it. So I need to just start reaching for the lowest objective and sizing up if I'm going to do that. So we created this breaker, right? And then I saw this. Then we also started creating this bullish breaker now. We had a low, high, lower, low. So after after we reached this 15-minute and the standard deviation, I took a buy right here off of this inverse fair value gap off the 1 minute. And we pushed up. What I did was I put my stop just 11 points over here, but what I didn't realize is that I should have put my stop at these lows where this last fair value gap was, because we came in here and I'm looking at the 920 to 940 macro, and that typically runs some type of liquidity. As you can see, it did end up running liquidity, but not before taking me out. So where I should have put my stop was at that 1 minute. As you can see, we would have been safe because it was literally one tick off. I would have been safe, but I didn't. I wanted to preserve a little bit of capital, and that ended up stopping me out. And so after I got stopped out, my bias didn't really shift because I was like, you know what, we're still looking pretty bullish. I was like, look, we ran these lows, we got stop rated, and now we're looking like we do want to continue up. So I took another buy right here, and now I did put my stop over here to these lows. And I put my TP to London highs because I thought it was going to run to London highs. All right, real quick, what I just noticed here also while editing this video and looking at it is this is exactly what happened. And I didn't realize it. We have on this London is a 5-minute SIBI. This 5-minute SIBI, right, is overlapping now. This hasn't been filled right above these highs. And what did we do? We took these highs and rejected the SIBI. So I shouldn't have been looking for London highs the whole time. I should have realized that I should have realized that after we took these highs and we rejected this 5-minute overlap in SIBI, that we weren't going to continue up. And now that I'm even looking at it, we have a high, low, higher high. We have our breaker right here, our bearish breaker with this. So this is a unicorn setup right here. And that's exactly why we weren't going to take London highs. So this is already helping me. Reviewing my trades is already helping me. We have our unicorn bearish breaker with a fair value gap that we came in. We took the highs. So this would have been a perfect entry for the shorts. So I just wanted to throw that in there. So we pushed up pretty hard, and then we started barcoding right here, right above these highs. So that kind of scared me out, and it always does. And I need to leave it because if there's a liquidity pool right there, more than likely we ran up all of this already. We took these equal highs. More than likely we're going to reach this. And not only that, this is a 2 to 2.5 standard deviation, negative standard deviation. So I'm thinking we're going to reverse here once we take it. So I took my position off here, even though I should have left it, because I did end up losing about 8 points. But it's all good. but it's all good, right? So what happens next is I FOMO and I'm like, dang, I think we're gonna still run this and we're gonna take London highs. So I get in. We're pushing up. We pushed up and we dropped down. Then we pushed up, and as we're dropping down, I was like, this is a terrible trade, even if we're going to take London highs. Number one, bad entry. Number two, I'm FOMOing in. Even if this trade works out, I'm breaking my rules. This is not what I should do, and I exited. I was like, I don't care if this trade would work out or not. I'm not going to take this trade because I'm breaking my rules, and this is a terrible, terrible entry because what's going to happen, right? I get in right here. Where's my stop have to be for this trade to be valid? All the way down here, all the way down here. Now, is the risk to reward worth it here? 12 points for a 23-point stop? Absolutely not, so I got out. We pushed down. We created this inverse fair value gap off this 1 minute BISI. And as soon as we kind of pushed up, I took sells here. Put my stop here. Another bad stop placement. My stop should have been right above these highs. If I was up above these highs, we would have ran and we would have took TP. So that's two trades already that I'm trying to mitigate risk way too much instead of looking at it, analyzing, and saying, okay, the risk is worth it here because this is high probability. Well, as soon as we pushed up to this, took me out and it started coming back down. And once again, I did the same exact thing. I got in because I was like, this trade is still valid. And then I got right out because I was like, you know what? I'm seeing some weird stuff going on with all the indices. What time was this at? 9:53, so 9:50, 9:55. We were around here. We were pushing up. Yeah. So ES was kind of pushing up, lollygagging. Dow was really pushing up. 9:50, 9:55. Now dollar is dropping. So I'm like, I think we actually might go back up. So I just got out. And this would have ran and hit TP also, but it's all right. The entry was bad out here. I should have waited. I should have had this stop above here, like I said, because this time you see I did put the stop above there. And this risk to reward was actually really good because I got a lot better of a fill than this one. But it's all good. It's all good. Then what we saw was we dropped down. We swept this original sell side liquidity from these lows. We still have these equal lows intact. And we created this inverse, and I did want to take shorts here. I was like, okay, now we have this silver bullet. It's 10 a.m. If we retrace into here, I'll take longs, and I'll just target these highs right here. That didn't happen. We came in. We had this little fair value gap. I took it, and I saw this price action. It wasn't immediately pushing up. I got out right away. I was like, this just isn't a clean trade. And I sized up because now I'm like break even on the day, which was another bad thing that I did. And after I realized this, I'm like, okay, now I'm FOMOing into trades. I'm taking bad trades. The indices all are uncorrelated, not doing what they should be doing, or what I would like to see happening. So I was like, I'm done. I'm done for today. And as you can see, look at Nasdaq. We're in this dealing range, from this high to this low. We're in the middle, and I'm like, I'm not trading this anymore. Dollar just took the highs, so now we can reverse down, push us back up. We have SMT now with ES. ES just took these lows while YM, Dow, and Nasdaq did not. This is a huge news week, right? This is non-farm payroll. So no news today on Monday, but there's news tomorrow. There's Tuesday, Wednesday, Thursday, Friday. I'm only trading until Wednesday, and then I'm done. I got hurt so many times on non-farm payroll that I'm not going to do it again. So pretty much I'm done here. I'm done. But what I've discovered lately is that these breakers are acting so beautifully, and they've been so on point with the reversal zones. So that's why I was happy I got out there. I should have took my shorts here and just held it, but I didn't. I got scared out. What happens a lot to me is that I change my bias really quickly, and I can't be doing that. But that's coming with experience. Since the last video I posted, I'm already getting so much more experience. I still have my little tilt streaks to where I'm 3-4 weeks in the green, and then one tilt week I blow it all. So I'm working my hardest now at this point to mitigate that and combat that. And I'm doing that right now by realizing, hey, I already took 1, 2, 3, 4, 5 trades. Was it 5 trades? 1, 2, 3, 4, 5, 6, 7 trades already. I'm done. I can't keep trading because everything is going to look like an opportunity. I'm good. I'm done for the day. I need to mitigate that because now at this point, one big loss, I lose all my, not even a big loss, one medium-sized loss, I lose all my profits for the day. now I'm going to be fighting to get those profits back. And that's exactly what I was doing with multiple of these trades, is that this first initial trade after I got stopped out, I was already in good profit. I should have been done right here. I was up more than I currently am. But no, I continue to trade and trade and trade. And that's what I need to do, is just not do that. Just stay out. So I think for the rest of the day, I'm done. If I trade, it's going to be on paper. I'm green for the day. That's all I need. And good to go.